Good afternoon, everybody. This is what we call the home stretch. I'll wait for the translation to deliver that to you. Okay, our next speaker is the Chief Strategy Officer of Goldman Sachs, a veritable American institution with a long history in Asia and China specifically, which is undergoing a transformation of its own right now. Please join me in welcoming Stephanie Cohen. Thank you for being here. Welcome.
It's great to be here. Thanks.
So, Stephanie, why don't we start by, if you could just explain to everybody what your remit is as Chief Strategy Officer for Goldman.
It's a good question. It's actually the question I asked when they asked me to be Chief Strategy Officer. And the answer I got was, here is a blank sheet of paper, go figure it out.
Does that mean there wasn't one before you?
There was one before me. He's actually fantastic. He's now our CFO. It had been,
that's good.
But the remit was a little bit different. In addition to doing that job, he also started Marcus, which is our consumer business, which I'm sure we'll talk about. And so what I do is I do strategy and M&A for Goldman Sachs, and then I also run a program called Accelerate, which is our internal innovation engine, and a program called Launch with GS, which is our commitment to closing the gender investing gap.
Okay, so the first two parts you said are strategy and M&A. Here, I'm going to give you that if you want.
Thank you.
You're welcome. And so I guess it's worth asking, what is Goldman Sachs' strategy?
So another good question that I also asked myself when I first.
I get paid big bucks to do this.
You're quite good at this. And so my remit as head of strategy, I didn't say this, but one of the things I think is really important is that the people inside of Goldman Sachs, our clients, and actually the general public understand what our strategy is. So one of the first things I embarked on is figuring out exactly how we were going to articulate our strategy. And we really think about it as three things. And one is growing and strengthening our existing businesses. If you think about our traditional market making businesses, our advisory businesses, our asset management and wealth management businesses, we're focused on growing those businesses globally. But you talked about a transformation when you introduced me, and that's really about diversifying our revenue and what we'll call growing more fee-based recurring revenues. And that will be what we're doing in things like transaction banking, which is payments, or in our consumer business, or as we combined all of our alternative investing businesses and our growing third-party fundraising. And then the last piece is operating more efficiently. I think when people hear that, they start to think that just must mean cost cutting, and that's not what we're talking about. What we're talking about is we're a bank. We became a bank right after around 2008, and when you become a bank, you actually can take in deposits and lend out money, and deposits are a really nice way to fund yourself. So one of the ways we're operating more efficiently is changing our funding mix, but it's also doing things in a one GS client-centric way. And so I'd like to say that no one cares about our internal divisions except for us. What our clients care about is us servicing them. And so the ultimate part of our strategy is that we're focused on clients, and we're focused on serving corporates, institutions, and individuals. And in doing that, we want to do that in a one Goldman Sachs way, and that's better for clients, but also more efficient.
Now, we have more to cover about Goldman Sachs and what you're doing as a firm, but I want to take advantage of the fact that we're here in China today and shift to China and then come back if we have time. So Goldman has been in China for many years, has had an interest in China. Tell everybody about that, and then maybe update us on where you stand today.
So Goldman Sachs has been in China for 25 years. It's been an important part of our growth strategy and continues to be an important part of our growth strategy. We just submitted our application to get to 51%, and our goal is to ultimately get to 100%, like all of the places that we run businesses around the world. And as we look at what's going on in China, we're actually quite encouraged by the reforms, particularly around things like capital markets and asset management. So we're growing our traditional businesses in China, whether that's our capital markets businesses, our advisory businesses, asset management, and investing. And we believe that China is an important growth area both domestically and in this market, but also for our global clients as we serve them where they believe that they're going to want to grow their businesses.
Take a moment and explain, when you say get to 51%, that means you have a joint venture now that is not 51%.
Correct.
Who is your partner, and what is the process for coming over that threshold?
Yeah, so we're engaged right now in a process which many people will be familiar with. You'll see it in terms of most U.S., the large banks in the U.S. are focused on getting ultimately to 51 and then 100%. And that's really a process that we're engaged with the governments in China. And it's something that's of real focus for us and for our leadership team.
And I'm sorry, just tell me, your partner here is, you have a joint venture partner?
We do.
Who is the partner?
I'm going to mispronounce the name, so I'm going to come back to you on it.
Okay, I won't be able to pronounce it any better than you. We had a woman, Deborah Lahr, who works with Hank Paulson now. I remember when Hank Paulson was CEO of Goldman, and when he was Treasury Secretary, he used to talk about the number of times that he visited China as CEO of Goldman. China obviously was a big opportunity. We just had a panel asking the question, are the U.S. economy and the Chinese economy decoupling? You don't think so, but so why not?
As you think about, so I'll talk to you about, I was just in Shenzhen earlier this week. I was there yesterday, and if you talk to the companies, I went to an accelerator in Shenzhen, and that accelerator is focused on robotics. It's focused on the software side of robotics, but it's also focused on the hardware side of robotics. And one of the things that they said in that meeting was that 1 week in Shenzhen is like 1 month anywhere else because of the ability to prototype and really build new products. And then when I asked, and I spoke to the accelerator about who was at that accelerator, where did the people come from? They came from all over the world. So there was a significant portion of their companies that were from North America. There was a significant portion from Europe, and there was a bunch from China as well. And so if you would sit inside that accelerator, you would think exactly the opposite, that it's not that we're decoupling and that there are many ways for us to come together and figure out places where there is real areas of expertise in China and there are really real areas of expertise in the US, and what are the ways that we can work together. Just before this session, I was actually out visiting a company, and they were talking to me about how are they going to expand their business in the U.S. And so I think if you listen to a lot of the rhetoric, you would ask that exact question, and I understand why you asked it. But I think if you sit on the ground and you're talking to companies, I think people are continuing to talk about ways in which the two economies can continue to work together.
And so in your conversations, can you screen out the political dialogue and say, well, I know this is going on here, but that doesn't mean we can't do business?
I think you have to realize where some of the rhetoric and some of what's going on has an impact on your business. You can't be blind to it, but you also can't just listen to that. People have asked me in my role as Chief Strategy Officer, how much time do I spend on the macro? So how much time do I spend on what's going on in the stock market day to day, what's going on with interest rates? And the honest answer is very little, because we're focused on building a business for the long term and not for building it for sound bites or day-to-day movements in markets. So you can't ignore what's going on, because we have a client business, and our clients certainly are focused on that, but you can't let it drive your ultimate strategy and how you think about where you want to be over the next 5, 10, 20, 50 years.
So from an external perspective, the biggest strategic move that Goldman has made in the last handful of years was starting Marcus, a consumer bank in the United States. Why Marcus? Why go to consumers for the first time in Goldman Sachs' 150-year history?
So Marcus Goldman founded Goldman Sachs, and so that was really a play to our history, because as you said, we have not really been known as being a consumer bank. Having said that, we've served individuals for many decades here and across the world in our private wealth management business. But the real reason for starting Marcus by Goldman Sachs is that if you look at what's going on, I think this country is the best place to see all the transformation that's happening in consumer banking. People want banking to be part of their daily lives. They don't want it to be something separate and apart that they do. They want to embed it in what they do, and a lot of that is on the phone that I'm sure all of you are carrying with you. And so while entering consumer banking would have been an exercise in opening branches many decades ago, today it's very different. So we felt that we could take the fact that we had a clean sheet of paper, a real excellence in technology, and combine that with all the balance sheet, risk, compliance functions that we have, and build a new and different consumer bank for the future, which we started with loans. We have deposits, but our real goal is to build a digital consumer bank of the future and really help people manage their financial lives and deliver products that are transparent and really put the customer first.
And is the intention for that to be more of a U.S. domestic business?
So today we're in the U.S. and the U.K., and that's where we're focused, and that's where we're growing that business. It's not on the pipeline to open anything in the near term, but it's certainly something that we'll continue to monitor.
Great. One of the top conversations we're having at this event is around the future of currencies, digital currencies, cryptocurrencies, the blockchain. How is Goldman Sachs approaching that topic?
So as we think about digitization of securities and digitization of money, we're pretty focused on how does that impact our various clients, whether they're corporates or institutions or individuals. We do have a team at Goldman Sachs that's focused on digital assets, and they're focused on, I'll call, three things. One is the digitization of securities. The second is the digitization of money, which you mentioned. And then third one is how you provide banking service to these more digital economies. And ultimately, if you look at the existing capital markets and taking those capital markets and first doing things like standardizing and then digitizing, then we can talk about whether or not any of that ends up being on the blockchain. But we do think by focusing on this in a client-centric way, there are a bunch of ways that we can work in this market. And like a lot of things, and particularly in areas that are new, we really want to find ways to partner and find global partners to work with, because we think that this is a problem that's bigger than us, and we're not going to solve on our own. And as you might imagine, in this space, as we continue to work through and think about ideas, we'll work appropriately with regulators around the world.
What's the difference? Can you explain what you mean by digitization of securities as opposed to digitization of money?
Yeah, the question is, so today it takes, we'll call it almost 30 days to clear a loan in the US, right? So a company decides that they want to issue debt and they decide to issue an institutional term loan, and then it takes them almost 30 days to clear. And so the question is why? Why does it take that long, and what can we do with the process to allow that to happen instantaneously? Isn't there a way to have, we'll call it a database, and it could be a blockchain, it could be something else, so that that can happen in a much more efficient manner? So taking the existing securities and digitizing them and then allowing that thing to happen instantaneously. Money is a different question, and so the digitization of money we're seeing happen in a couple of different ways. There's one which is crypto, which is a different form of currency, but then there is things like stablecoin, where you're just taking the essence of what is an existing currency and turning that into digital form for the same reasons, which is how do you make it easier for people to move money around and less expensive for people to move money around?
What I'm hearing is that Goldman, not unique from other large American banks, is looking at this very carefully, but hasn't done anything particularly big. And you said you're focused on what your clients' needs are. So if I connect those two statements, if they're both accurate statements, clients, contrary to what we hear in various venues, are not overly interested right now in a financial sense in things like cryptocurrencies.
I think that's right. There's if you look at, let's talk about the market. So the market for securities, for equities and fixed income and all types of securities around the world is $400 trillion, thereabouts. And the market for cryptocurrencies is less than $1 trillion, it's 200 billion. So if you think about what's important to our clients, what's important to our clients is that they're trying to issue securities and raise money, and can we do that in an efficient way? There are people, individuals all around the world who want to move money around and do that in an efficient way, but cryptocurrencies, at least today, is a very small part of what people are trying to do.
And could you just repeat that? $200 billion of, what was the larger number?
400 trillion.
400 trillion, and we know that of the 200 billion, that much of that is either speculating or gaming or something nefarious.
Yeah, I don't know what it's being used for, but all I know is that it's not buying me a coffee down the street.
You mentioned at the outset that M&A is part of your remit. What are you looking for?
The way that we think about M&A, and actually the way that we think about all ways to execute our strategy, is one question is, what in the world is your strategy? And then do you buy, build, partner, invest? So we think about it as a continuum of how to do things. And so I'll talk to you about what we did in Marcus as an example of generally how we're thinking about M&A. So we talked about our consumer business, and that business people would generally consider in an organic build, that we built that ourselves. But the reality is that we bought the GE deposit platform, that we bought a business called Clarity Money, which is a personal financial management tool, and we've partnered with Apple in order to do our credit card. So Marcus is a really great example of how we want to do things going forward, which is we're not going to do everything ourselves. It's going to be a mixture of everything. And while we'll look at things, I think the chances of us doing something really large is pretty low probability. We're really focused on more bolt-on opportunities. Another thing that we did recently in the US is we bought United Capital, which is a wealth management business.
And are you interested in, are there things that you would want to buy, either people or assets outside of the United States, including in Asia?
I think there's no reason that we don't think about it exactly the same way. And then on the partner side, I think that's a particularly good area of focus as you think about what we're doing outside the US. You know, one of the things that historically Goldman Sachs did was we tended to build everything ourselves. So when I started, we had our own Word because we didn't want to use Microsoft Word. Today, on my phone, we actually built the application how I get my email. So we had a little bit of a habit of deciding to code everything ourselves, and we're really trying not to do that. We'll call it, less than 50% of the logic layer in Marcus was not coded inside Goldman. And I only raise all of that because as we're figuring out how to grow all of these businesses, I think partnering with companies like what we did with Apple, I think is interesting, and is interesting outside the US in addition to inside the US.
Question in the room. Anything anyone would like to ask Stephanie? What can you tell us about, oh, I'm sorry, I have one right here. Jennifer. A mic will come to you. Just stand up. There you go, right, other side, Jennifer. Other side, there you go.
Thank you, Stephanie. I'm curious to hear more about Goldman Sachs' collaboration with Apple with this new credit card. What is your rationale, behind this initiative, and where do you see it goes, and what does success look like in the next 5 years?
So we're thrilled with our collaboration with Apple and that we've launched a credit card. It's really the first new credit card that's been launched in a decade that was built from scratch. So the fact that we were able to build a credit card from scratch that's really different and new from what anyone had ever really built. And the idea behind it is quite simple, which is that, and I know things are a little bit different here in China in terms of how people pay for things and money, but in the US people still are using credit cards a lot. And so the idea is you can be in line at the grocery store and apply for the Apple card, and by the time you get to the register, you're going to use your Apple card. You don't need to wait for something to come in the mail. It automatically is there. Once you start using your Apple card, you'll automatically get cash back, and you can swipe that right into your account. And one of the great things about it, and it's really about how we think about our consumer business, is that we want to help consumers manage their financial lives. And so there are a lot of features inside the Apple card that allow you to see how much money is due, what would happen if you paid half your bill, if you paid the whole bill, how much you're paying in interest. So it takes things that are more esoteric and difficult financial concepts and makes them really easy for people to understand. So it's really part of the whole picture of how we're trying to help people manage their whole financial life.
So I'm a happy customer. I'm enjoying it very much. Have you, and yet, as people in the room know, it's useless when I come to China, as are the other credit cards in my wallet. Have you investigated, or let me ask it a different way. When are you as an industry going to solve that problem? When will I be able to come to China and use my US bank issued cards to buy things with my phone?
You're asking me to solve something for the Chinese government? I think we're going to ask other people.
No, they need to be your partner. I assume you want a partnership.
Yeah, I think it's exactly what you said, which is it's a global world, and we want to figure out a way where people can leave New York City and fly and can make things interoperable. But it's about U.S. companies figuring out how to operate and do that in China, but it's also about Chinese companies doing that in the US as well. And so I think we're getting there. I mean, I read something this morning about the ability to fund some of the the accounts on the Chinese apps with bank accounts that are outside of China, so that tourists coming to the U.S. can do that. So I think we're moving there. I don't think it's all U.S. companies with the innovation. I'm sure you'll see some from the Chinese-based companies as well.
And I apologize for not leaving a lot of time to do this, but briefly tell everyone about the diversity efforts that you're spearheading at Goldman Sachs.
No problem. So we announced an initiative about a year and a half ago called Launch with GS, which is our commitment to closing the gender investing gap. And if you look globally, 50% of the population gets kind of 10 to 15% of all venture capital dollars. So in a world awash in capital where everyone is asking where they can find money to invest in, there's a part of the population that's really not getting the capital they need or deserve. And so what we're trying to do is three things. One, invest directly in women-founded, owned, and led businesses. Two, work with clients to invest in female managers, because if you don't get diversity on the investing side of the table, you'll never get it in the companies that you fund. And then most importantly, we're building an ecosystem around supporting that. And we're doing that with entrepreneurs all over the world. So we're doing that. We have an event in Shanghai coming up. We've done them in Hong Kong. We've done them all over the world. And we really want to bring women entrepreneurs all over the world together so that they can help each other to grow and fund their businesses.
Stephanie, we appreciate your being here with us today.
Thank you.
Thank you.